Hello traders, Gary Wagner here, 9:45 a.m. in Honolulu, Hawaii. It is the 14th day of September, Wednesday, and this is the daily report for gold. We currently have gold trading lower this morning, trading off about $19, $18.80, currently trading at $18.14 to $18.15 in that area. I do want to start by looking at a 15-minute chart so you can see the most recent activity in the marketplace itself. And when we look at that, you can see that this marketplace itself had found some real strong resistance right at around 1841. I talked about that yesterday, 1841 being a 38% Fibonacci level. And as you can see, on two occasions yesterday, it attempted to take that level out and hold that level. And as you can see, on neither case was it actually effective. And since then, you can also see a pretty clear straight line down from these highs, 1840, 42 in that area, down to a low where it retested this double bottom right around 1808. You can see this low here that was just reached a few minutes ago, and I believe that that matches up with these lows here, forming a double bottom in the market. The other thing worth noting is this last candle, and it is a very long-legged doji type candle with almost a hammer body. If we get confirmation or follow through, we will see these go eclectically green and stay there for a while and move back up the range. Now, as you can see, as we look at this 15-minute chart, as you can see, it is making an attempt or a stab to try to go green again. We'll have to follow it through this report today. Traders, as you can see, not only has the market found support, but it's been really trading much higher. It's only been a couple of minutes since the first part of the video. You can see quite a little rally going on here. Basis, the most active contract, this is a continuous contract, 1821, 1818. Some fundamental news obviously must have just broken through in the marketplace. We'll try to look into that in a bit. Now, the one thing that I did want to spend a couple of moments talking about today was the fact that we are in a correction, and the attempt to define the correction to me is not as important as the acknowledgement that we're in a correction. In other words, a rose by any other name is simply a rose. So whether it is like this on the bottom right hand side, which is a ABC labeled correction, or whether it's a triangle correction, which is a 1, 2, 3, 4, 5, it is still quite obvious that we're in a correction. But I am finding some interesting technical information within the marketplace itself. And let me show you what I'm looking at. Now, here's what I'm finding quite interesting. When we take a look at this, and this is drawn with the potential that we have a pennant formation. Of course, on a pennant formation, what you want to have is a series of higher lows. Now, we get that, but we do have an aberration right here in the middle. It goes from here, it goes higher, but here we have a lower low. Now, on the way down, we're looking for a series of lower highs, and we do get that, as you can see. And we do have a nice little rally, by the way, that seemed to have found a support area right at the bottom of this line, as you can see by the low, and does appear as though it's moving up. And here's what I'm finding interesting. If, in fact, we are labeling this as a triangle correction, and if in fact it follows this count, we might witness a nice little breakout here, because what you want to realize is that the idea behind it, and the way I'm looking at the count at this point, is 1, 2, 3, 4, and then 5 right in here. On the 5th, what you get is, according to R.N. Elliott, of course, is that thrust. And that thrust is an utter breakout to the upside. And the energy released behind the consolidation or compression of ranges is such that when it does break, it could break hard, and we could see a sizable move in the market. So that's one thing that really does interest me. When we take a look at this marketplace vis-a-vis a standard correction, Now, traders, I have converted this to a 360-minute standard candlestick chart to look at the potential as an ABC correction. Now, of course, if you recall, it's a very, very irregular correction. That's what it's called. You have your orthodox top here and your B wave is higher. But what R.N. Elliott basically says is this. You would get a count of 3, 1, 2, and 3, which would be A, B, C down. You would get then A, B, C up. And then you would get a 5 count. 1, 2, 3, 4. And then this would be our 5th or our last leg. Here's what I'm finding interesting, though. When you look at these last bottoms, you're getting this double bottom here. That's not very typical of this type of a corrective wave. And any way that I really want to look at it, my eye is still drawn to the fact that we absolutely have this pennant or triangle formation forming because we have this narrowing of range. Because of that, I still believe that the most likely count is going to be a triangle count. And the reason that that's important, and this is what I really need to stress, is because unlike a standard ABC correction, this type of correction, when it is terminated, terminates with a terrific amount of power, a sizable move, a release of energy as it breaks through the apex because of the consolidation in range, and you get a very, very nice breakout because of that. That is why it is really important. We'll have to take a look. Traders, maintain your position, maintain your stop. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.